Good morning. I'm Harley Schlanger from the Larouche organization with your daily update for January 20th, 2022. I'm going to begin by just referencing some events that are taking place over the next couple of days, which I'll cover in much more detail tomorrow, namely Secretary of State Blinken's meetings yesterday in Kiev, his meetings today in Berlin, where he'll meet with the German government, the French, and the United Kingdom, and then tomorrow when he meets with Sergei Lavrov. This is being billed as a sort of a last gasp attempt from the United States to stave off an invasion of Ukraine by Russia. President Biden yesterday said he expects Russia to invade. His actual term was he predicted that Russia will move on Ukraine. He said Putin has to do something. Now, it's in this context that you have a continuing dangerous confrontation between the United States along with NATO against Russia, where the Russians are insisting that the West must recognize the security implications for Russia of an expansion of NATO eastward, including bringing in Ukraine and Georgia into NATO, and that Putin is asking for security guarantees that that will not happen. Whether the West is listening, we don't know. We know they're listening, they're talking, but so far there's been no indication that they will accept the proposals that have come from Putin that represent a red line to protect Russian national security. So we'll have more on that tomorrow, but I want to go today more to the whole question of what's the underlying cause from the Western side of this confrontation. Why is it that the West, especially the US, the British, and NATO, why are these countries so intent on imposing their will on Russia? Now, this has to do with the fact that we're in a systemic financial collapse in the West, which actually means the whole world financial system is heading toward oblivion, collapsed under the weight of unsustainable debt, a sea of money that's being used to bail out the bad debts. And this is a story that's mostly unreported. Now, I'm going to concentrate on what we've been doing on this, the Executive Intelligence Review, and also the reporting from Pam and Russ Martins of Wall Street on Parade that go back to this question of what happened with the repo loan crisis beginning in the fourth quarter of 2019. Now, this occurred right after the Federal Reserve Jackson Hole, Wyoming conference, where they made clear that the intention was to go to what was called then the Great Reset, which is an intent to give more power to central banks, such as the Federal Reserve, the Bank of England, the European Central Bank, give them more control, not just of credit and currency, but of spending, to put in the hands of technocrats employed by the biggest banks in the world operating through the central banks to set up a global central bankers dictatorship, which would be imposed and reinforced by military power from the United States and NATO. Now, this is something that the Russians and Chinese will never accept, the surrender of sovereignty to bankers from the West. But if you look at it, you can see why they shouldn't accept it and why we in the West have to break the power of these central banks and these financial institutions that are bailing out the bankrupt financial institutions with trillions of dollars, creating hundreds of new billionaires. At the same time, we're seeing the inability because of inflation, because of the collapse of earning power, because of the prices going up on everything from utility bills to gasoline to medical care to home and rent. While these are going up and Americans are becoming, and Europeans, less able to afford to live, the billionaires are rolling around in huge volumes of cash that are there for them to play with to protect bankrupt assets that are on their books. Now, here's the report that, just to review this, because it's essential that people understand this, that the cumulative total, well, actually, let's go back. What happened in the fourth quarter of 2019? There was obviously a large derivative blowout. That is, the counterparties could not come up with the money that was necessary to meet a payment. Now, the payments on derivatives are relatively small. The derivative volume of trading is over $1 quadrillion. Think about that for a second. But what happened is that there was something that blew out. It may have been 2.67 trillion. No one's quite sure how much the derivative bet was because it's still covered up. But what happened is that they used the repo loans, the repurchase agreement, where the banks made overnight loans to other banks and corporations to cover their debt on a 24-hour basis in return for some security, which they then return the next day and the money gets paid back. Well, the financial institutions were sitting on so much bad debt that the volume that they needed for the overnight loans kept growing, that the banks could no longer come up with the funds. So they turned to the Federal Reserve starting on September 17, 2019, a specific date. And they started with $20 billion from the Fed for rollover repo loans. It soon became $50 billion, $70 billion, hundreds of billions of dollars. The fourth quarter of 2019, the cumulative total of rolled over repo loans was $19.87 trillion. 62% of those loans went to 6 banks. Nomura Securities, a foreign bank, Japanese-owned, $3.7 trillion. JP Morgan Securities, $2.59 trillion. Goldman Sachs, $1.67 trillion. Those 3 banks alone got $8 trillion in rollover bailout money. Barclays Capital, another foreign bank, $1.48 trillion. Citigroup Global Markets, $1.43 trillion. And Deutsche Bank, a brain-dead bank here in Germany, $1.39 trillion. These banks, including the foreign banks, were bailed out for the second time in 11 years, going back to the 2008 crash. And it was due to the failure to regulate the derivatives market, which was supposed to be done under the Dodd-Frank bill that was shepherded through the Congress by Barack Obama. It was supposedly done. Now let's just compare something to the 2008 Lehman collapse. Lehman had 900,000 derivative contracts outstanding, and the counterparties for that included JP Morgan Chase, Morgan Stanley, Citibank, the usual suspects, Bank of America and Goldman Sachs. Now at that point, in 2007, when Lyndon Larouche first predicted the banking crash that was coming, and then after it happened in 2008, he said it's necessary to re-regulate the banking system, starting with reinstituting Glass-Steagall, which means separating investment banks from commercial banks, protecting the commercial banks because they're necessary. They have family income, they have small business accounts, and so on. Separating that from the speculative investment banks. Now, what Larouche said is there should be no bailout of speculative financial instruments. There had been an incredible volume of increase in speculation, in the creation of what were called at the time financial innovation, which included derivatives, swaps, and things of that sort, that added up to trillions of dollars. And what Larouche said, right off the debt, it's gambling debts. Why should the nation be saddled with a long-term debt to bail out speculators who are living the high life while the average American is losing their job and losing their homes? Almost 6 to 7 million homes were foreclosed during the period of 2008-2009. And Obama backed up the bailout completely as president. Now, had Larouche's policy been adopted then of writing down the debt, writing off the loans, and then setting up a new financial system, a new Bretton Woods, based on sovereign national banks as credit institutions for production, we wouldn't have this global systemic collapse today. Had people listened to Larouche at that time, whose forecast had been accurate going back to his warning from 1971 when Nixon took the dollar off gold and set up the floating exchange system under George Shultz, Volcker, and others. Had people listened to Larouche, we never would have been in this situation. Now today, there's a warning. The Fed says it's going to end quantitative easing and raise interest rates. Well, this will probably trigger a wave of bankruptcies. The World Bank is warning of a wave of disorderly defaults in low-income countries. And we're seeing mortgage rates starting to rise. When the COVID protection bills are lifted, we're going to see more and more homeless people as houses are being bought up by speculators to set up as high rent properties. Now, here we see what the problem is. Why do you not know about this? How come this is not common news? Well, the Martins over at Wall Street on Parade have been reporting that when the Federal Reserve released the fourth quarter of 2019 figures, which was required under the Dodd-Frank law, the one thing the Dodd-Frank law did, but of course it's, 6 quarters too late. But when this was released, and the scandal of trillions of dollars going to banks to cover their gambling debts, instead of covering it, there was not a peep out of the financial talking heads. Did you see it on CNBC? Did you see it on Fox Business? No, they don't cover it. The Wall Street Journal, Forbes, they don't cover it because they benefit from the billionaires who have profited from this flood of money that's gone into the speculative markets to do what? To keep alive financial instruments that have nothing of underlying value to cover their face value. Instead, what keeps their face value high is that banks can get money that they can use to buy and trade these financial instruments that are worthless. And we, the American people, the European people, pay the price for that in the form of inflation and higher cost of everything. Now, it's not just that the push for war against Russia is to divert your attention from the financial crisis. It's that what is feared by the Wall Street, City of London crowd who are running this scam is that the Russians and Chinese, along with other countries, are about to pull out of this collapsed financial system, that they're looking for an alternative to the petrodollar system. And this would be centered around the Belt and Road Initiative, which is attacked nonstop in the Western media. Why? Because the Chinese are setting up banks that loan money for production. They're shutting down investment banks that loan money for speculation. They're moving to a financial system based on the old principles of the American system. That's the issue behind the war drive. The danger that a Eurasian economic space will become the basis of a new financial system, which will not be a funny money fiat system controlled by central bankers on behalf of private speculators. That's my report for today, and tomorrow we'll pick up on this whole question of what's going on with the magical mystery tour of Tony Blinken.